What's up, guys? I'm Nobody Special. I apologize for the delay in starting the stream. We were having some technical difficulties this morning, but we got those all resolved, and we are going to shrink my big fat melon overhead because we have the August CPI reading is coming out in a little under 1 minute. And I wanted to go through real quick before it got here the expectations. We've got a expectation of 5.3% year over year and an expectation of a 0.4% month over month. And the last couple of months, the expectations have always been a lot less than what we actually got. So real quick, I just want to bring up the website here. Let's put this up here. Again, I apologize. I was having technical issues right now. Let's go up to the most recent information and make sure. And it looks like it is out already. All right, let's get right to it. The Consumer Price Index rose 0.3% in August. That is below the 0.4% expectation. Seasonally adjusted 0.5, and we're looking at a 5.3% year over year, so right on the money for year over year. So for once, the CPI number was, I would say this is in line with expectations, maybe just a little bit below. Let's get into the report a little bit more here. The indexes for gasoline, household furnishings, operations, food, shelter all rose in August, contributed to the monthly all items seasonally adjusted increase. Energy index increased 2%, mainly due to a 2.8% increase in the gasoline index. The index for foods rose 0.4%, with food at home and away from home both increasing 0.4%. So the food number shouldn't surprise anybody. If you do your own shopping, you've seen that by now. The energy index increasing at only 2%. I wouldn't get too comfortable with that number because the price of natural gas is on the rise big time right now. Now, I guess that trend didn't really start until September, so that wouldn't show up in the August numbers. That makes sense. Let's scroll down a little bit more here. Index for all items, less food and energy, because we know people don't need food and energy, so we always take those out. Rose 0.1%. That's pretty low. It's the smallest increase since February of this year. I guess they're going to call that one a win. Along with the indexes for household operations and shelter, the indexes for new vehicles, recreation, medical care also rose in August. The all items index rose 5.3% for the 12 months, a smaller increase than the 5.4% for the same period ending in July. That's true. Let's see. The energy index rose 25% over the last 12 months, and the food index increased 3.7%. Both were larger than the increases for the 12-month period ending July. That's interesting. Now, here, the number I'm always interested is the rent number. Let's see if we can just do a Control F, rent. Okay. The shelter index increased in August, rising 0.2%. The indexes for rent and owner's equivalent rent both rose 0.3% over the month, while the index for lodging and lodging away from home rose 2.9%. So the big run-up in the housing market still has not affected the CPI reading. That is huge because home prices have been on an absolute tear for the better part of a year now. And I did a video a few weeks ago about an article that the Dallas Fed had put out that said that owner's equivalent rent typically lags by about 1 year the moves in the actual home prices. And it's been about a year since home prices started this parabolic rise that we've been seeing. So I was expecting, this is 2 months in a row now that I've been expecting to see a bigger rent increase in the CPI index, and I haven't seen it yet. So I don't know, is that going to hit all at once like a ton of bricks? Who knows? But that really surprised me. Let's see, here we vehicles again. The index for new vehicles continued to rise in August, as expected because of the chip shortage, increasing 1.2% after rising 1.7% in July. The recreation index, 1.2%. That seems a little light for the vehicle prices. I'm not going to lie. The price increases I've seen, especially in new trucks, is a heck of a lot more than 1.2%. So I would say that number is a little bit suspect. What's going on, Robin? So according to this, no need to worry about statistics. All green. I get scared when people say it's all good. Reminds me of the Titanic, unsinkable. That's a heck of an analogy, Robin. Yeah, this I guess the term transitory is pretty much the unsinkable that it was on the Titanic. And I guess if we're going to use your analogy, Robin, I'm going to go ahead and say that the big increase in rent that is around the corner will be the iceberg on the horizon. All right, let's see a little bit more of the granularity in this report. Okay, in contrast to these increases, several indexes declined in August. This is interesting. The index for airline fares fell sharply, decreasing 9.1% over the month. The index for used cars and trucks declined 1.5% in August, ending a series of 5 consecutive monthly increases. The index for motor vehicle insurance fell 2.8%. All right, so used cars and trucks falling 1.5%. That's not such a big shock because I think used car prices had risen way too far, way too fast. And that was driven also by the chip shortage. But I think it got a little bit ridiculous where you could sell back a car that you bought last year for more than you paid for it. I mean, that flies in the face of economics, right? Typically, when you drive a car off the lot, the second you drive it off the dealership, it's dropped in value by $10,000. Now, all of a sudden, it's gone up by $10,000. So that obviously wasn't sustainable. So the used cars and trucks declining by 1% in August, I believe that number. Airline fares falling by 9.1% for the month. That is a huge drop. Delta variant, I guess. I don't know. That is a really big drop for August. I mean, it's still summer. That's still relatively peak travel season. So I'm very surprised to see that. Keep an eye on that. That's interesting. The index for all items less food and energy rose 4% over the past 12 months. Used cars and trucks increased 31.9% over the span. Okay, so the 31.9%, that is the year-over-year number. And I would expect that to be pretty high. I mean, it was even higher last month. And we'll still see the year-over-year numbers for used cars. Even though prices may start to decline month over month, the year-over-year numbers are going to stay high for probably another 10 months. All right. What else do we have? The index for new vehicles rose 7.6%. Again, that's year-over-year. Largest 12-month increase since the period began in June 1981. That's not surprising. Shelter increase 2.8%. Again, this shelter number really seems suspect to me. 2.8% over the last 12 months. I mean, think about what Zillow has said about your home price. Think about all the bidding wars in the real estate market and the shortage of supply and all the trouble home builders are having. Only a 2.8% year-over-year increase in shelter. Doesn't seem to jive with what I'm seeing. So, all in all, I would say that's a pretty tame inflation report. Even though 5.3% is still astronomically high inflation, I'm a little surprised this came in so low today. I was really expecting higher. I'm going to stop short of saying I'm disappointed because only a madman hopes for high inflation. But again, I keep circling back to this owner's equivalent rent because of this article I saw from the Dallas Fed. You know what? While I got you guys here, I'm going to bring that up because that warrants mention again. Dallas Fed owner's equivalent rent. I should have had this up before I started. There is a chart on this article. So here, let's move me. No, not the Dallas Fed. We want to move me. There's me. Okay. So this chart is showing the blue line is Zillow house price growth, and I guess this is a national average. Now, I know what you're saying, Zillow house price, not exactly scientific, right? I get that. The very light, we'll call that a yellow line or brown line, that is owner's equivalent rent inflation. And again, these are year over year increases that we're showing on this chart. And then the red line is PCE rent inflation. Now, the thing I want to point out on this chart is that the blue line, the actual Zillow home prices, tend to make a move 1 year, almost to the day, before owner's equivalent rent starts to increase. Like, take here, right, the bottom in 2009, after the global financial crisis, when home prices first began to increase. If you notice, it wasn't until a year later, in the middle of 2010, that owner's equivalent rent started to go up. And then here we see this is, I guess, the middle of 2020, when home prices started this parabolic move straight up. Right? This is the real estate run for the last year, where we've seen a 15% year over year increase in home prices, and still owner's equivalent rent is only just now beginning to change. So this is why I'm a little surprised to see such a low inflation number, because owner's equivalent rent is something like 23 or 24% of the total CPI index. I mean, it's the single largest variable in the whole convoluted equation. So I'm really expecting owner's equivalent rent to catch up with this massive move in home prices. And we're due for that any month now. And this is 2 months in a row where I've been surprised to the downside that we haven't seen the big spike in owner's equivalent rent yet. So keep an eye on that. Let's see. Yeah, Robin is saying, I guess they're going to start excluding rent prices, seasonally adjusted rent, to try to keep the CPI number low. So anyways, folks, what does this 5.3% read mean? Well, everybody, the big talk in the market is about the taper, right? And is the Fed going to taper in September? We had that lousy jobs report last week where the economy only produced about 235,000 jobs when they were expecting like 750,000. I mean, they came in 500,000 jobs short in the jobs number last week. So that really had a lot of people pushing out their taper timeline, where we had kind of thought it was going to start this month. The Fed meets next week. And when we got that lousy jobs number, a lot of people said, they're probably not going to taper in September unless we get a blowout inflation number. Well, we got our inflation number. It was definitely not a blowout. Now, historically speaking, it's a blowout. It's a high number. But it did come in just a tick lower than it did last month. So I think the fact that it's just a tenth of a point less is enough for Powell to say, we have time to wait. We're going to prioritize maximum employment over price stability. So, I've been handicapping. I was previously a 50-50 that the Fed would taper in September, and then I lowered it to a 70-30. I'm going to stick with my 70-30 that they don't taper this month, or next month for that matter. I think we're still looking at the very end of the year, if not early next year, before they start tapering. And again, keep in mind, Jerome Powell is up for, not re-election, what is it, reappointment, reconfirmation, whatever the term is. Powell will be defending his job in February. So he doesn't want to do anything that is going to rock the economic boat between now and then, because all indications are he wants to keep his job. So that's something to keep in mind. So what do I expect? I think stocks are probably going to like this. Let's see what the market is doing, because, again, it's all about the Fed right now. Let's bring up my trusty Yahoo Finance. Let's see what we got. Yep, I'm just looking at the S&P here, and the Dow and the NASDAQ. They all like it, because that means easy money may continue for another couple of weeks. Looks like silver and gold don't want to make up their mind just yet. Down a little bit, but there's been a little bit of a hiccup. Bond yields are spiking a little bit. Bitcoin likes it. So that's that is interesting. Let's bring up the price charts for my favorite shiny metal, silver, and see what we've got. So we're down about 9 cents right now. That's not a huge drop. All right, so silver, you can see on this candle, really can't make up its mind where it wants to go on this CPI read. I mean, it popped up, it came down, it's bouncing around. Seems like it wants to go up. And I guess that would be precious metals pricing in less of a likelihood of a rate hike anytime soon. Let's see if gold is doing the same thing here. Yep, gold is having about the same price movement, which I would expect. Not really sure where it wants to go. So, all in all, we've got a tame inflation read. It means the Federal Reserve's tapering and their slowing of their asset purchases is probably going to be delayed at least until next month. No real big surprises, but I'm sticking by my story that in the coming months we have some higher inflation numbers ahead of us. So, yeah, that's all I got for today, folks. I hope you enjoyed this video. If you did, don't forget, smash that thumbs up, subscribe to my channel, hit that notification bell. It really helps me out. It would help this channel to keep growing. I'd be forever in your debt. In the meantime, live small and dream big.